Is your city's housing market a ticking time bomb? With interest rates hovering around 6.5%, insurance costs spiking, and inventory piling up in some of Canada's hottest markets, the dream of home ownership is starting to crack. By 2026, some cities could see home prices drop like a stone. Curious which ones? Stick around as we count down the 10 Canadian cities where the housing market is set to crash by 2026. Let's dive in. 10. Richmond, British Columbia. Let's kick things off with Richmond, BC, a city just south of Vancouver that's been riding the wave of Metro Vancouver's red-hot housing market. But in 2025, the tide is turning, and Richmond's housing market is showing serious signs of trouble. Richmond's median home price in April 2025 sits at a hefty $128,000, according to the Canadian Real Estate Association, CREA, down 5.2% from April 2024. That's a big shift for a city where prices have been climbing for years. Why the drop? For starters, Richmond's market is heavily tied to Metro Vancouver's, which is facing a perfect storm of challenges. The sales to new listings ratio, SNLR, in Greater Vancouver dropped to 45% in April 2025, signaling a buyer's market. Inventory is another issue. Active listings in Richmond have surged by 18% year over year, with homes now sitting on the market for an average of 48 days, up from just 30 days in 2023. Buyers are getting pickier, and sellers are starting to sweat. Add to that the high cost of borrowing. Mortgage rates are around 6.7% for a 5-year fixed, and affordability is taking a hit. The average household income in Richmond is about $85,000, meaning a typical home costs nearly 12 times annual income. That's unsustainable. Then there's the investor pullback. Richmond has long been a hotspot for foreign and domestic investors, but tighter regulations on short-term rentals and a cooling luxury market are driving investors away. Condo prices, in particular, are under pressure, with a 6.1% year-over-year decline to $720,000. If you're a seller, that's not the news you want to hear. So, what's the outlook? By 2026, CREA forecasts a further 3 to 5% price drop in BC's lower mainland, and Richmond's high prices and rising inventory make it a prime candidate for a bigger correction. This city's housing market isn't crashing yet, but it's definitely wobbling. If economic uncertainty or trade tensions with the U.S. worsen, Richmond could see a sharper decline. 9. Burlington, Ontario. Burlington, Ontario, a picturesque city nestled between Toronto and Hamilton. Known for its Lake Ontario waterfront and family-friendly vibe, Burlington's housing market has been a darling of the Greater Toronto Area, GTA. But in 2025, the cracks are starting to show, and a price correction is on the horizon. The median home price in Burlington is around $925,000 as of April 2025, down 6.8% from last year, according to the Ontario Real Estate Association, OREA. That's a significant dip for a city where homes were pushing $1 million just a couple of years ago. The problem? Burlington's market is caught in the GTA's broader slowdown. Home sales in the GTA dropped 20.2% year over year in April 2025, and Burlington's not immune. Inventory is piling up fast. Active listings in Burlington have jumped 25% since 2024, with homes lingering on the market for an average of 45 days compared to just 22 days in 2023. Sellers are getting nervous, and price cuts are becoming common. Nearly 30% of listings have slashed their asking price in the past 60 days. This is a big shift from the bidding wars of 2021. Affordability is another hurdle. Burlington's median household income is about $102,000, but even with declining interest rates, now around 4.2% for variable mortgages, a $900,000 home is a stretch. Mortgage payments on a typical home eat up 45% of monthly income, well above the recommended 30%. Add in rising property taxes, up 4.5% in 2025, and buyers are backing off. Then there's the investor factor. Burlington's condo market, once a hotbed for investors, is cooling. Condo prices have dropped 7.2% year over year to $550,000, and with more rental units hitting the market, investor confidence is waning. By 2026, TD Economics predicts a 5 to 7% price decline across Ontario's urban markets, and Burlington's high prices and growing supply make it vulnerable. This city's still got charm, but its housing market is on shaky ground. 8. Mississauga, Ontario. Mississauga, Ontario, the bustling suburban hub of the GTA, with its condo skyline and proximity to Toronto, Mississauga has become an attractive destination for families, professionals, and investors. But in 2025, the city's housing market is flashing warning signs, and a crash by 2026 seems more likely. The median home price in Mississauga is $875,000 as of April 2025, down 7.1% from April 2024 per OREA data. That's a steep drop for a city where prices were flirting with $950,000 at their peak. The culprit? A combination of oversupply, fading demand, and affordability challenges. Inventory is surging. Mississauga has seen a 30% increase in active listings year over year, with over 3,500 homes on the market in April 2025. Homes are now sitting for an average of 50 days, up from 25 days in 2023. Condos, which make up a huge chunk of Mississauga's market, are struggling the most. The average condo price has fallen 8.3% to $510,000. And with new high-rise developments still coming online, the oversupply is crushing prices. Affordability is a major issue. Mississauga's median household income is around $95,000, but an $875,000 home requires a mortgage payment of about $4,200 a month at current rates. That's nearly 50% of monthly income for many families. Add in rising insurance costs, up 15% in the GTA due to climate risks, and buyers are hesitating. The investor retreat is another blow. Mississauga's condo market has relied heavily on investors, but with rental yields dropping, average rent for a one-bedroom is down 3.3% to $1,892, and stricter Airbnb rules, many are selling off properties. CMHC predicts condo prices in the GTA could face continued downward pressure through 2026, and Mississauga's oversaturated market puts it at risk. By 2026, experts forecast a 6 to 8% price decline in Ontario's suburban markets, and Mississauga's mix of high prices, growing inventory, and fading investor interest makes it a prime candidate for a crash. This city's still a great place to live, but its housing market is in for a rough ride. 7. Brampton, Ontario. Brampton, Ontario, the GTA's vibrant flower city known for its diversity and booming suburbs. But in 2025, Brampton's housing market is starting to wilt, and by 2026, it could be facing a full-blown price crash. As of April 2025, Brampton's median home price is $850,000, down 7.5% from April 2024, according to the Ontario Real Estate Association, OREA. That's a steep drop for a city where detached homes were pushing $1 million just 2 years ago. The Greater Toronto Area's broader slowdown is hitting Brampton hard, with home sales in the GTA plummeting 22% year over year. So, what's driving this decline? Inventory is exploding. Brampton has seen a 32% surge in active listings since 2024, with over 2,800 homes on the market in April 2025. Homes are now sitting for an average of 52 days, compared to just 20 days in 2023. Sellers are scrambling, and price cuts are everywhere, 35% of listings have reduced their asking price in the past 2 months. This is a far cry from the frenzied bidding wars of the pandemic boom. Affordability is a massive hurdle. Brampton's median household income is around $87,000, but an $850,000 home with a 6.7% mortgage rate demands a monthly payment of about $400. That's nearly half of monthly income for most families, way past the 30% affordability threshold. Add in rising property taxes, up 5% in 2025, and buyers are pulling back fast. The investor retreat is another nail in the coffin. Brampton's semi-detached homes and condos have been popular with investors, but with rental yields dropping, average rent for a 2-bedroom is down 4% to $2,100, and new provincial taxes on investment properties, many are bailing out. Condo prices have fallen 8% year over year to $490,000, and with new developments still coming online, the oversupply is crushing the market. By 2026, CMHC forecasts a 5–8% price decline across GTA suburbs, and Brampton's combination of high prices, surging inventory, and fading demand puts it at serious risk. This city's still got cultural vibrancy and community spirit, but its housing market is sliding toward a correction. If you're thinking of selling, now might be the time to act. 6. Kelowna, British Columbia. Kelowna, BC, the Okanagan Valley's crown jewel, where lakefront views and vineyards have made it a real estate hotspot. But in 2025, Kelowna's housing market is losing its sparkle, and by 2026, prices could take a serious tumble. Let's break it down. The median home price in Kelowna is $780,000 as of April 2025, down 6.3% from last year per CREA data. That's a big shift for a city where homes were flirting with $850,000 at their peak in 2022. Kelowna's market is cooling fast, and the signs are everywhere. The sales to new listings ratio, SNLR, in the Okanagan region dropped to 42% in April 2025, firmly in buyer's market territory. Inventory is piling up like never before. Active listings in Kelowna have jumped 28% year over year, with over 20,500 homes on the market. Homes are now lingering for an average of 55 days, up from 32 days in 2023. Sellers are slashing prices left and right. Nearly 33% of listings have seen reductions in the past 60 days. This is a stark contrast to the days when properties sold in hours. What's fueling the slowdown? Affordability is a big issue. Kelowna's median household income is about $82,000, but a $780,000 home requires a mortgage payment of around $3,800 a month at current rates. That's a tough pill to swallow for locals, especially with rising insurance costs, up 12% due to wildfire risks in the region. Buyers are hesitating, and demand is drying up. Then there's the second home and investor market. Kelowna has long attracted retirees and investors from Vancouver and Alberta, but with interest rates at 6.7% and stricter short-term rental rules, many are pulling out. Condo prices have dropped 7.5% to $450,000, and luxury lakefront properties are seeing fewer takers. The Canada Mortgage and Housing Corporation, CMHC, warns that Kelowna's reliance on external buyers makes it vulnerable to a correction. By 2026, TD Economics predicts a 4 to 6% price decline in BC's interior markets, but Kelowna's high prices and growing inventory could push that even higher. This city's still a stunning place to live, with its beaches and wineries, but its housing market is on thin ice. If you're banking on Kelowna's prices holding steady, you might want to rethink that plan. 5. Vaughan, Ontario. Vaughan, Ontario, the GTA's upscale suburb known for its luxury homes and proximity to Toronto, takes our number 5 spot. This city has been a symbol of suburban success, but in 2025, its housing market is showing serious cracks, and by 2026, A price crash could be imminent. The median home price in Vaughan is $1,050,000 as of April 2025, down 8.2% from April 2024, according to OREA. That's a sharp decline for a city where detached homes were fetching $1.3 million at their peak. The GTA's broader market woes are hitting Vaughan hard, with home sales down 21% year-over-year across the region. Inventory is surging like a tidal wave. Vaughan has seen a 35% increase in active listings since 2024, with over 2,000 homes on the market in April 2025. Homes are now sitting for an average of 58 days, compared to just 18 days in 2023. Price cuts are rampant. 40% of listings have reduced their asking price, some by as much as $100,000. This is a buyer's market, and sellers are feeling the pinch. Affordability is a major roadblock. Vaughan's median household income is around $105,000, but a $1,050,000 home demands a mortgage payment of about $5,000 a month at a 6.7% rate. That's nearly 60% of monthly income for many families, making home ownership a distant dream. Add in rising property taxes, up 4.8% in 2025, and buyers are walking away. The luxury market is another weak spot. Vaughan's high-end homes, often priced above $2 million, are struggling to find buyers. With fewer high-income newcomers moving to the GTA and tighter mortgage rules, demand for these properties has tanked. Condo prices have also fallen 7.8% to $620,000, and with new developments still hitting the market, oversupply is a growing problem. By 2026, CMHC projects a 6 to 9% price decline in GTA luxury markets, and Vaughan's mix of high prices, surging inventory, and fading demand puts it in the danger zone. This city's still got its malls, parks, and suburban charm, but its housing market is teetering on the edge. If you're holding property here, 2025 might be your last chance to sell high. 4. Surrey, British Columbia. Surrey, a fast-growing city in Metro Vancouver that's been a go-to for families and investors chasing more affordable homes outside Vancouver's core. But in 2025, Surrey's housing market is hitting a wall, and by 2026, prices could crash hard. Here's why this suburban powerhouse is in trouble. Surrey's median home price in April 2025 is $920,000, down 7.8% from April 2024, according to the Canadian Real Estate Association, CREA. That's a steep drop for a city where detached homes were pushing $1.1 million just a couple of years ago. Metro Vancouver's cooling market is dragging Surrey down, with the region's sales-to-new listings ratio, SNLR, at a chilly 43%, deep in buyer's market territory. Inventory is flooding the market. Active listings in Surrey have skyrocketed 30% year-over-year, with over 3,200 homes available in April 2025. Homes are now sitting for an average of 50 days, up from 28 days in 2023. Sellers are slashing prices to compete. 35% of listings have cut their asking price, some by as much as $80,000. This is a far cry from the days when homes sold in hours. Affordability is a massive issue. Surrey's median household income is about $90,000, but a $920,000 home with a 6.7% mortgage rate demands a monthly payment of around $4,400. That's nearly 50% of monthly income, crushing the dreams of first-time buyers. Add in rising insurance costs, up 10% due to flood risks in low-lying areas, and buyers are backing off fast. Investors are also jumping ship. Surrey's townhouse and condo markets, once hotbeds for rental investors, are cooling. Condo prices have dropped 8.5% year-over-year to $520,000, and with new developments still coming online, oversupply is a growing problem. Stricter short-term rental rules and falling rental yields, average rent for a one-bedroom is down 3.5% to $1,750, are pushing investors to sell. By 2026, CREA forecasts a 5 to 7% price decline across Metro Vancouver, but Surrey's high prices, surging inventory, and reliance on investor demand make it a prime candidate for a bigger correction. This city's still got parks, diversity, and suburban appeal, but its housing market is on a slippery slope. If you're thinking of buying here, you might want to wait for prices to drop further. 3. Calgary, Alberta. Calgary, Alberta, the prairie metropolis known for its sleek skyline and proximity to the Rockies, takes our number 3 spot. After years of riding high on oil wealth and migration from pricier provinces, Calgary's housing market is starting to buckle in 2025, and by 2026, a price crash could be on the horizon. Let's dive into the numbers. The median home price in Calgary is $560,000 as of April 2025, down 5.5% from April 2024 per CREA data. That's a notable shift for a city where prices surged 20% from 2021 to 2023. Calgary's market is cooling fast, with home sales down 15% year-over-year in the Calgary Real Estate Board, CREB region. The sales-to-new listings ratio is at 48%, signaling a shift toward buyers. Inventory is piling up like snow in a Chinook. Active listings in Calgary have jumped 25% since 2024, with over 4,500 homes on the market in April 2025. Homes are now lingering for an average of 45 days, up from 22 days in 2023. Price cuts are becoming common. 30% of listings have reduced their asking price, some by $50,000 or more. This is a big change from the bidding wars of the pandemic boom. What's driving the downturn? Affordability is a key factor. Calgary's median household income is around $99,000, but a $560,000 home still requires a mortgage payment of about $20,700 a month at current rates. While that's more manageable than in Vancouver or Toronto, rising interest rates, 6.7% for fixed mortgages, and inflation are squeezing budgets. Property taxes, up 4.2% in 2025, aren't helping either. The job market is another concern. Calgary's economy, heavily tied to oil and gas, is facing uncertainty with global energy prices stabilizing and fewer high-paying jobs attracting out-of-province buyers. Migration to Calgary, which fueled demand in 2022 to 2023, has slowed by 12% in 2024, according to Statistics Canada. Condo prices, a bellwether for investor activity, have dropped 6.8% to $320,000, and with new high-rise projects still hitting the market, oversupply is a growing issue. By 2026, TD Economics predicts a 4-6% price decline in Alberta's urban markets, but Calgary's recent price gains and current inventory glut could push that higher. This city's still got its stampede spirit and mountain views, but its housing market is losing steam. If you're a seller, you might want to act before prices slide further. 2. Markham, Ontario. Markham, Ontario, the GTA's tech hub and suburban gem, lands at number 2. Known for its upscale neighborhoods and proximity to Toronto, Markham has been a real estate darling for years. But in 2025, its housing market is teetering on the edge, and by 2026, a price crash could hit hard. Brace yourself. This one's a doozy. The median home price in Markham is $1,080,000 as of April 2025, down 8.5% from April 2024, according to OREA. That's a sharp decline for a city where detached homes were fetching $1.4 million at their peak in 2022. The GTA's broader slowdown is hammering Markham, with home sales down 23% year-over-year across the region. Inventory is surging like a tsunami. Markham has seen a 38% increase in active listings since 2024, with over 2,500 homes on the market in April 2025. Homes are now sitting for an average of 60 days, compared to just 16 days in 2023. Price cuts are rampant. 42% of listings have slashed their asking price, some by $150,000 or more. This is a buyer's market, and sellers are in panic mode. Affordability is a massive roadblock. Markham's median household income is around $103,000, but a $1,080,000 home demands a mortgage payment of about $5,200 a month at a 6.7% rate. That's over 60% of monthly income for many families, making homeownership nearly impossible. Rising insurance costs, up 14% due to climate risks in the GTA, and property taxes, up 5% in 2025, are adding to the burden. The investor pullback is another blow. Markham's condo and townhouse markets have relied heavily on investors, particularly from overseas. But with rental yields dropping, average rent for a two-bedroom is down 4.2% to $2,300, and new provincial taxes on investment properties, many are selling off. Condo prices have fallen 8.8% to $610,000, and with new developments flooding the market, oversupply is crushing prices. By 2026, CMHC projects a 7 to 10% price decline in GTA's high-end suburbs, and Markham's sky-high prices, surging inventory, and fading investor interest put it in the crosshairs. This city's still got its tech parks and cultural diversity, but its housing market is on the verge of a major correction. If you're holding property here, 2025 might be your last chance to cash out. 1. Toronto, Ontario. And now, the #1 city where home prices are set to crash by 2026. Toronto, Ontario, Canada's financial powerhouse and real estate juggernaut. Known for its soaring skyline, vibrant culture, and sky-high home prices, Toronto has been the epicenter of Canada's housing boom for decades. But in 2025, the cracks in this market are wider than ever, and by 2026, a price crash could reshape the city's real estate landscape. Hold on to your hats. This one's a biggie. As of April 2025, Toronto's median home price is a staggering $1,120,000, down 9.2% from April 2024, according to the Toronto Regional Real Estate Board, TRREB. That's the steepest annual drop since the 2008 financial crisis, and it's a far cry from the $1.3 million peak in early 2022. The Greater Toronto Area, GTA, is in a full-blown buyer's market, with home sales plummeting 25% year-over-year and the sales-to-new listings ratio, SNLR, at a measly 40%. So, what's driving Toronto to the top of our crash list? Inventory is absolutely exploding. Active listings in Toronto have surged 40% since 2024, with over 15,000 homes on the market in April 2025, the highest in a decade. Homes are now sitting for an average of 65 days, compared to just 14 days in 2023. Price cuts are everywhere. 45% of listings have slashed their asking price, some by $200,000 or more. Condos, which make up nearly half of Toronto's market, are in free fall, with prices down 9.8% year-over-year to $650,000. New high-rise developments keep hitting the market, but buyers are nowhere to be found. Affordability is Toronto's Achilles heel. The city's median household income is around $98,000, but a $1,120,000 home with a 6.7% mortgage rate demands a monthly payment of about $5,400. That's a jaw-dropping 65% of monthly income, making homeownership a pipe dream for most. Rising insurance costs, up 15% due to climate risks like flooding, and property taxes, up 5.5% in 2025, are piling on the pain. Even high-income professionals are struggling to justify these prices. The investor exodus is the final nail in the coffin. Toronto's condo market has long been propped up by domestic and foreign investors, But with rental yields tanking, average rent for a one-bedroom is down 4.5% to $2,200. And new provincial taxes on investment properties, many are bailing out. Short-term rental restrictions, including stricter Airbnb rules, have flooded the market with former rental units. CMHC warns that Toronto's condo oversupply could lead to significant price corrections through 2026. Then there's the economic backdrop. Toronto's job market, while still strong in tech and finance, is showing signs of strain. Layoffs in retail and hospitality, combined with slower migration, newcomers to Ontario dropped 10% in 2024 per Statistics Canada, are dampening demand. If Canada's economy faces broader headwinds, like a U.S. trade slowdown or persistent inflation, Toronto's high prices make it the most vulnerable. By 2026, TD Economics forecasts a 7-10% price decline across the GTA. But Toronto's perfect storm of sky-high prices, massive inventory, and collapsing investor confidence could push that closer to 15%. This city's still Canada's beating heart, with its festivals, diversity, and urban buzz, but its housing market is on the brink of a historic crash. If you're a homeowner here, 2025 might be your last chance to sell before the bottom falls out. Wow, what a ride! From Richmond's cooling suburbs to Toronto's towering condo crisis, these 10 Canadian cities are facing housing markets on the edge of a cliff. By 2026, oversupply, affordability challenges, and investor pullbacks could send prices tumbling in places once thought untouchable. Whether it's Surrey's inventory flood, Calgary's economic slowdown, or Toronto's affordability nightmare, the warning signs are flashing red. So, what's your take? Are you in one of these cities, nervously watching the market? Or are you a buyer waiting for prices to drop? Drop a comment and let us know which city you're keeping an eye on. And if you found this countdown helpful, give it a share and stick around for more real estate insights. The housing market's about to get wild. Don't get caught off guard.